let's welcome in Prachi Kodikal, who is now with us, partner at Bay Capital. Good afternoon, Prachi. Thanks so much for taking out time for us. Could you just first start by what's happening in the markets? Did you think 18,200 will come in so soon after the month of March?
Well, so far, I think the corporate numbers that have been coming in have been pretty good, except for a few sectors. We're seeing good numbers across the board. I think the Nifty expectations overall for earnings for this year is around 14 to 15%. And given that the Nifty has underperformed so far this year, global markets, I think it should catch up to the earnings growth pretty soon. So, yes, I think we should see some uptick in Nifty once all the earnings have come in.
In terms of banking names, can you just talk to us that some of the numbers from HDFC, ICICI Bank were fantastic on certain matrices, but still the stocks are not performing. Why do you think so?
I think valuations might be a factor that people are still looking at. Maybe they're looking at much more attractive valuations to come in. Though HDFC, I think, still looks attractive, but on the other banks, I think the valuations are where they're holding people back from investing. But they should, again, I think, catch up to the earnings growth over a period of next 3 to 4 quarters.
In terms of sectors that you like where valuations are attractive versus what the numbers have shown, can you tell us more about that? Even if it's a smaller sector, it's fine.
Sorry, could you repeat that?
So you said that in banking, the numbers are great, but probably people are tired of valuation or waiting for valuation to correct. There will be opposite such sectors as well, where valuations are low and numbers probably surprised. Anything so far that comes to your mind?
So I will not be able to give you stock-specific views, but a couple of sectors that I can talk about is obviously, consumer staples. There are a couple of pockets where valuations do look attractive and should do well. Autos, I think, have been beaten down quite a bit, but the numbers have started to come in favorably. And I think as inflation cools down and rural growth starts to come back in, auto should start doing well as well. So those are the two sectors I think should continue to do well as the numbers come in, but have been depressed in terms of valuations.
Right. I know you cannot talk about stocks and which stocks you all have bought, but can you just tell us that what is the kind of sectors where you all are looking to buy? What is the kind of company? So I'm not looking for a banking or an NBFC or an insurance name. I'm looking at what sort of themes are you all looking to play? Are you all looking to play it via the internet growth? Are you looking to play via companies which have debt they are trying to recover? Are you looking at companies where high growth is there and high growth is continuing? What sort of themes you all are playing in the market?
Okay, so we look at bottom-up approaches. We're not driven by macro at all. Again, in bottom-up, we look at compounding plays. We look at stocks that can give sustainable earnings over a longer period of time. And within that, we find that there are a couple of sectors like consumers that we like a lot. Consumer is a sector that keep on compounding growth over a period of time. Valuations do tend to be a little bit rich, but I think earnings are also catching up. So consumer overall is a good sector that we like to invest in. Again, in financials, like you said, we're not looking at banking, but there are a lot of underpenetrated sectors. So you could look at credit cards, insurance. There are certain pockets, again, within financials as well, where we think that, the per capita penetration or overall penetration levels are very low, and stocks in those sectors would do well. So financials, but within, say, cards, insurance, or some of the other sectors like mutual funds where penetration is low could do well. Another sector that we're looking at is knowledge-based outsourcing. So we're looking at stocks within the outsourcing space, but not necessarily the ones that are driven by a low-cost arbitrage or a labor arbitrage. We're looking at stocks in the outsourcing space where there's a lot of value add and is backed by tech or research. So that is another space that we're bullish on. And of course, like you said, the internet space, the digital space, which is in flavor right now, is another sector that we've been heavily investing in.
In terms of flows, how are you looking at it? Flows have been mixed. A lot of blocks are coming in every time markets are going up. You think markets still need to settle into that range?
Yes. So, a lot of the digital plays have been beaten down. Most of them are down 40-50% from their highs. Market is getting adjusted to these valuations. Of course, there's been a lot of supply in terms of the pre-IPO investors selling off. And I think once these supplies are off, the overhang from these stocks will go away. And then I think if you start adding up to these stocks at these levels, they give an opportunity for a good return over the medium term.
Just as far as the old age businesses are concerned, do you like the chemical space? They are gaining market share. Any such stories from the export side that you like?
So, like I said, from the export side, we're not really playing, cost arbitrage or labor arbitrage space. And again, I cannot give you a stock specific name, but like I said, see on the pharma R&D side is something that we'd like, wherein the companies are doing specialized R&D, value add. Again, on the EMS space, maybe there are a couple of companies that do a lot of designing and manufacturing on the export front. So those are the outsourcing or export plays that we like.
Right. When we talk about how things are moving on the mid cap side, mid caps have corrected and not really seen a recovery. Any view on any of the mid cap side of the market?
So mid caps again, I think have done well over the last 1 or 2 years. So we could see some sort of time correction on the mid cap space. Again, valuations there also are a little bit on the higher side. So people are on the sidelines, I believe, waiting for valuations to be a little bit more attractive to get into that.
Thank you so much for taking our. All right, ma'am. Thank you so much for taking our time for us. Always good to get perspective from you.